Hi there, everyone. Welcome to this week's edition of our mini webinar series from earnings season in August 2024 for the ASX. Let's get straight into it. General advice warning. These are thoughts and opinions, general advice only that do not take into account your financial circumstances. You should consult a professional before making any decisions. Massive week this week. Probably, I think it is the biggest week of earnings. Probably in terms of the amount of companies, not only that, probably market cap as well. The week's winners, WiseTech, was absolutely outstanding. We had a couple of the analysts being a little bit down on it leading into the number. They beat expectations by a mild amount, but the outlook was really good, obviously, and it opened up about 17%, record highs. Around about $120, holding its ground here at the moment, but has stalled for now. Look, it's such a great company, and its only problem is going to be, running out of people to be clients, to be honest, and capturing too much market cap is about the only thing I can see in WiseTech's future. Usually they're ahead of the game on technology. Obviously, that's sort of where they've cut their teeth. But I can see the only risk really with this company as it stands at the moment is, if someone was to come out with a super innovative AI, but I would probably back WiseTech to beat them anyway. Audinate was on the laggards list a couple of weeks ago, but the result finally came out. They've learnt their lesson to be a bit better with their communication. Jumped up 20% on the day that day. It's back around about the $10 mark, but at least now it's kind of stabilised there for the moment. We really are looking at that probably being fairly sideways for the next period. And I would say it would start to resume growth around that, around the next earnings season, I suppose. So we're current holders of that. Still very confident in it long term. It's one of our long term growth picks. It's got that moat. It's just obviously having that little transitional year. Judo Bank was another one as well. Analysts have been pretty dismissive of this. It's been a long-term favourite of mine, and we bought some around the 90 cents to $1 mark this year. Some people have kept them who like them long-term. Some people have sold out around the 140 mark. We're trading around about the 150 mark here at the moment. Their loans in arrears did double, but they were well short of. They've got to rise by at least another 50% again for them to be short of what they'd expected. So they've got the capital and reserves there for to cover that if the economy does take a little bit of a nosedive. Laggards, A2 Milk, and this is a volatile one. It was an absolute darling when we had that growth phase in 2021 out of COVID. It's really just struggled ever since. And look, I don't really hold out huge hopes necessarily. It's starting to be a bit of a crowded market. Megaport, network as a service business. We quite like this one. It's been an alpha rec. We've had people sort of buying over the last couple of days. It fell 20% on the earnings, and it's dropped a further 4 or 5 here on the Friday. Overall, it didn't miss by that much. And it will really, if at all, to be honest, and probably put the high expectations to the market. It is a very volatile stock on earnings. It quite regularly moves 10 to 20% on earnings, but they did go net profitable. So I'm a little bit confused as to why why there was such negativity around it. But it does have some long-term tailwinds, which Macquarie Bank. Macquarie Bank highlighted in their update, which was that Cisco laying off about near 1,000 workers makes their services even more critical. AI tailwind as well. So I think there's probably not bad long-term buying here for Megaport. Goodman Group, the results were pretty damn close to expectations. It's been the absolute darling in the REIT sector. Sort of drifted off over the last few days. I just think basically the market had it priced probably a little bit too high. They do have that 13 odd billion to 14 billion in 82 projects running. There's a lot of the industry is actually having pretty bad issues at the moment. A lot of building companies folding. So you would expect with 82 projects going, there will probably be some trouble with at least one or two of them. Although if someone's going to get 100% strike rate, it's going to be Goodman's. But just a little bit of heat came out of that, and overall, I think it's rallied 50 odd percent since the last earnings or thereabouts. Corporate travel was another one. Opened lower, nearly 10% lower, I think, and then finished only down 1% on the day. Has drifted off since. Look, this company's obviously had issues. It doesn't have any debt. It managed its finances really well over COVID. Business travel hasn't quite recovered the same as what retail travel has. Obviously, with Zoom probably replacing quite a few meetings. They had that deal for the refugee housing in the UK, which the government backflipped on, which has really hurt them. And we're probably just looking at a 2025, with their words, where it's a bit of a transitionary year. But overall, I would say on a long-term basis, corporate travel down here on a 5-year basis is extraordinarily good value. Rightio, week ahead. So it's the week of the heavyweights, really. BHP, obviously on Monday. You've got Woodside, king of the energy sector there on the Tuesday, king of iron ore and Fortescue on Wednesday. And, well, one of the kings of retail on Thursday with Wesfarmers as well. So Pilbara will be interesting to see how they manage their costs. Obviously, the lithium price has been quite soft. They were sitting on quite a lot of cash. They are sitting at really low levels. The market's very much under pressure. It is still the most shorted stock in the market, so you would expect either a capitulation from existing shareholders on a bad report or potentially some profit taking and some pretty heavy buying. There's 22% of that stock is shorted at the moment, which is the highest I've seen for a short in the last 5 years. Lovisa should be interesting as well. That's going to come up. That's one of the viewers' picks. NextDC it is quite volatile over earnings. It'll be interesting to see how that data center thematic is really going. Goodman's didn't have the growth that they, that analysts were expecting, and the analysts made quite a few excuses for that. In their post earnings reports, but they're not usually as merciful on NextDC, so that may be a little bit of a risk, that one. Obviously not ASX earnings, but NVIDIA comes out with their earnings on Thursday night, Friday morning. NVIDIA really is the tentpole of the AI thematic. It's trading around about the 125 mark, which is close-ish to record highs, about $15 from record highs. We have not seen the AI thematic impress of late. NVIDIA would be the last straw, I would say. It's quite key earnings there. And overall, there's not, I think there's some manufacturing and things out basically on the economic front. Preview BHP, EPS is actually expected to improve by 3% for the next couple of years. But BHP is currently trading at its lowest levels since 2022 when the iron ore price was much lower again. It's going to be pretty hard pressed to disappoint the market. They've got long-term plans for copper and potash, which everyone, whilst prices are a little bit under pressure here at the moment, no one has said anything but unbelievably great things about those two thematics. Copper for me, with there's strikes going on in South America at the moment, some of their bigger mines and things, and there's those big copper mines coming to end of mine life. I think that's one that's going to see a short squeeze at some stage. So I wouldn't expect BHP to be able to really disappoint. It's a little bit more expensive than Fortescue, though. Fortescue has really been hammered. It's the stock that analysts love to hate, like CBA, for instance. Now, look, one thing that was interesting out of Rio's report was the average iron ore prices were only $1 lower than the previous period. Obviously, they're pricing in a lot of forward weakness in that iron ore price. But I would imagine, Twiggy's pretty good at managing PR. They've shut down that hydrogen thing, which simplifies the business, which everyone will be pretty happy with. Their analysts are expecting Fortescue to drop dividend by around about 20%, but I would not be surprised to see, there be a bit of a push to lift that dividend to really put a bottom in this stock. I mean, it recently got to $17, PE of below 5. And realistically, I would say, and Andrew Forrest has had a history in the past of coming in and buying after earnings. Not to say that he's going to do it this time, but he is very, very aware of the effect that has on confidence within the company. There has been a large amount of board turnover, a few controversies. I honestly don't think that affects their ability to dig it out of the ground, put it on a train, and ship it. Because they've been the best at that forever. All of this top line stuff that's happening at a board level, I think, is largely irrelevant unless they're a growth company. To be honest, I think if anyone's under the illusion that Andrew Forrest isn't running that company, they'd probably need to review that view, I would say. I mean, he is the largest shareholder, and obviously that dividend as well is beneficial to him. So I would say that would be my gut feel. But as I said, the analysts love to hate Fortescue, and they will probably pick through it with a fine tooth comb to find something wrong, because they do like to take pot shots at the company and the largest shareholder. Viewers pick Lovisa. Look, market darlings in the retail space, super surprising strength from the consumer, particularly in the quality retailers in this earnings season. Definitely not going to fight that. Even super retail, which I gave as the risk last week, whilst it was only up a few percent, they managed to still do okay despite the likes of Bapcor being in the same sector being hit quite hard. So the cream has really risen to the top this earnings season. You would expect that to be the case with Lovisa as well. Store rollout is massively key here. It's a little bit of thin pickings when you're looking at Lovisa from the analyst point of view, because realistically they're changing their updates at Macquarie, Citi and the likes of Morgan Stanley, etc., on the basis of LinkedIn posts from the new CEO and guessing the timing of whether it's going to be 900 stores open or 914 stores open. So obviously that is super, super sensitive. I've never seen social media as a reference for an analyst for an analyst pick or analyst recommendation. So obviously that's going to be looked at very, very closely, the store rollout. We want something above, we want something at least close to that 914, and we want the outlook to be for that 1,000 stores by 2025, or maybe even a slight up in the guidance. So it has technical momentum, oozing from it at the moment. I'd probably be trimming if it got a really large spike. And I think you'd sort of be buying dips on that based on the technicals overall, because I think they'll probably try and find a positive. The stock's up 23% since the last earnings, and they are expecting the EPS and rev to be down a little bit. You can see there in the yellow. That doesn't particularly correspond, but it is, with a growth company, these things can be quite volatile. South 32 is the risk alert. Very much already at a low here. They had a really severe storm where at their manganese port, they're the largest manganese exporter in the world. South 32, obviously they've got an absolute mixed bag of all the things the BHP didn't really want when they split it off. And look, there's some really good things in there, a lot of battery minerals and copper as well. But they've just had problem after problem after problem lately. Look, it's such compelling value here for Fortescue particularly, and BHP just as a general core position that we nearly always hold here at NPC. I just don't know whether you want to take the risk. I think you can get much better exposure in this sector. It may bounce back because it is sitting on its absolute bottom at the moment, but so is Fortescue and so is BHP. I would probably, even if Fortescue slightly disappoints, you're still going to get somewhere around the 8% fully franked annualised dividend. So, you can probably wear a little bit of pain when you're receiving that sort of dividend, whereas I don't think South 32 is expecting a divvy. And we may get the truth and the fallout from that manganese port, which could be anywhere up to 12 months in fixing that we've heard rumours of. So overall, I think there's just a little bit too much risk there, and particularly when you've got such great alternatives in the space. In those, well, even Rio to a certain extent, but Rio probably doesn't look quite as cheap at the moment. So how can we help you guys? Look, we do risk management reports for the likes of people who, have had those great winners like Pro Medicus and WiseTech, for instance. We do have a risk management report where we help you manage your exit and knowing when to sell and when to trim and things like that. They've been very popular, and it's something that's very unique here to MPC markets. Obviously, we have recommendations, alpha, we have watch lists for small caps, we have watch lists for growth stocks, and we have balanced portfolios. We help out SMSF, individual accounts. We also do structured products, which you'll be able to see on a special essential alternatives on AusBiz on September the 10th, where we're partnering up with StroPro, the structured investments provider, to show you how you can take some profits in these, in these consumer discretionary or these banks. Set an entry price about 20 to 30% lower, but while you wait, get paid anywhere up to double digit 10% odd fixed coupons. In the meantime, so really useful tools for people who are scared of selling, or they want to wait for lower prices. It's a great way to get paid, more than double the term deposit rate to wait, and then if the prices fall down, then you just receive the stock. So there's a whole bunch of things we can help you with there. It has been a very volatile earnings season. Next week will be our last week. You've sent through your viewer picks for next week, and I'll see if I can probably do those on an individual basis for you going forward. Thanks for listening, and we will speak again for the final episode next week.